U.S. stocks, they were off their worst levels Friday afternoon. However, they continued to remain in the red, this time with the major averages appearing set to post their first weekly decline in 5 weeks as investors, for the most part, shrugged off a better than expected consumer sentiment report. Now, on the economic front, consumer sentiment that managed to rise to its highest level in 6 years, with the final reading on the overall index climbing to 85.1 in July from 84.1 in June. Investors were also reluctant to jump in ahead of next week's Federal Reserve meeting and the ever so important non-farm payrolls report. Meanwhile, President Barack Obama will not announce a decision about who will lead the Federal Reserve until the fall. This according to a White House official. Current Chairman Ben Bernanke's term that expires next January. And with European shares higher on strong corporate earnings boosting investor confidence, while Japan's Nikkei 225 index that tumbled to its lowest level in nearly 3 weeks as the Japanese yen continued to strengthen against the U.S. dollar. It looked to be quite the active and volatile finish for the Dow Jones to not only the session but the week as well. Speaking of which, taking a look right now to see how the Dow Jones has performed. The Dow Jones Industrial Average was down more than 100 points in afternoon trade, dragged lower by Coca-Cola and Hewlett-Packard. At the same time, the S&P 500 and the Nasdaq in the red. The volatility index that continued to trade above 13, and most key S&P sectors were in negative territory, dragged lower by consumer staples and materials. Taking a look now at today's major movers and shakers, we first take a look at the earnings reports, beginning with Amazon.com, which declined this after the internet retail giant reported an unexpected loss. At the same time, Starbucks rallied after the coffee house chain topped earnings expectations, at the same time also forecasting current quarter profit above street consensus. Zynga plunged more than 20% after the social video game maker handed in a current quarter guidance that missed the forecast. In addition, the company said it has decided not to pursue a license for real money gambling in the United States. And Activision Blizzard surged after the video game maker said it will buy back nearly $6 billion worth of the Vivendi's holding in the company.